Microsoft MSFT Market Intelligence Brief. 1. Software sector rotation and AI efficiency fears. Microsoft is bucking a broader sell off across the software sector, where a growing narrative is taking hold. If AI dramatically accelerates productivity and enables businesses to do more with fewer tools and fewer people, the traditional per seat software licensing model may be structurally under threat. Bears argue that enterprises consolidating vendors or reducing headcount could translate directly into subscription churn and slower revenue growth for legacy software players. Yet a vocal cohort of institutional and retail investors is pushing back, framing the dip as a textbook market overreaction. Their case: Microsoft is not a victim of AI disruption, it is the disruption, having embedded Copilot deeply across its M365, Azure, and Dynamics suites. For them, the sell off represents a rare entry point into one of the world's most defensible AI franchises at a relative discount. 2. OpenAI's Pentagon deal and the expanding AI ecosystem. Sentiment around MSFT is also being shaped by OpenAI's newly announced Pentagon contract and fresh funding rounds that signal continued institutional confidence in the AI stack Microsoft has bet heavily on. As OpenAI's largest backer and exclusive Azure partner, Microsoft stands to benefit materially from every dollar OpenAI captures in government and enterprise AI spending. However, the community is far from unified. Geopolitical overtones, including anxieties around military AI applications, data sovereignty, and the ethics of defense contracts, are casting a shadow over the bullish narrative. Separately, structural concerns linger about whether enterprise customers will gradually shift from broad software subscriptions to narrow task specific AI APIs, potentially cannibalizing Microsoft's own SaaS revenue streams. The result is elevated implied volatility and sharp intraday swings as the market struggles to price these competing realities. 3. Strategic debate: AI and cloud as long term moats. At the core of the investment conversation is a strategic question. Can Microsoft successfully monetize the AI transition it helped catalyze, or will the very wave it's riding erode the foundations of its existing business? Bulls point to Azure's accelerating growth, the rapid Copilot adoption curve across enterprise clients, and OpenAI's Pentagon win as proof that the AI trade has durable, government backed legs. Skeptics counter that AI infrastructure spending is cyclical, margins on AI services remain unclear, and the market has already priced in a highly optimistic scenario. The debate is further complicated by macro headwinds: rising rate expectations, a strong dollar weighing on international revenues, and broader questions whether the AI investment supercycle has reached a local peak or is merely pausing before the next leg higher. Geopolitical shock: US Iran strikes and UAE data center fire. Traders are in rapid response mode following reports of US Iran military strikes and a significant data center fire in the UAE. The dual shocks are forcing a reassessment of near term risk exposure, particularly for cloud and infrastructure heavy names like Microsoft, with meaningful Middle East data center presence. The UAE incident in particular raises operational resilience questions, though early indications suggest redundancy systems are functioning as designed. On the geopolitical front, markets are wrestling with a familiar binary. Does escalation trigger a sustained flight to safety sell off in growth equities, or does a swift de escalation prompt an aggressive relief rally as panic sellers get squeezed? Energy price spikes tied to the conflict are an additional variable, with knock on effects for data center operating costs and broader inflation expectations. 5. The gap down versus recovery debate. The most heated real time debate is purely tactical. Will MSFT gap down sharply at the open as overnight futures digest the geopolitical headlines, or will the stock find buyers quickly and stage a V shaped recovery? Gap down proponents cite the compounding of negative catalysts: sector rotation fears, geopolitical risk, and macro uncertainty as sufficient justification for a meaningful downside move before price discovery stabilizes. Bulls argue that institutional accumulation on dips has been a persistent feature of MSFT's recent trading pattern, and that any gap below key technical support levels will attract significant buy side interest. Options markets are reflecting the uncertainty, with short dated puts and calls both pricing in outsized moves, a classic setup where positioning itself may amplify whichever direction the stock chooses to break.
Okay, so in the long term, there isn't any bounce that is expected on Microsoft, even though we have on this weekly chart, okay, a pivotal projection here of 451.66. It's a pivotal projection. It was initiated on the 8th of December when the stock was, let's see now, that the stock was at somewhere around 483. It was initiated, indicating that it was going to plunge, and it did plunge, but it's still reiterating it. It's still reiterating it. Does not mean it's going to bounce and test that high. Well, never say never. In the maybe on the daily basis, it may attempt it, but what we have here is saying that we should expect consolidation to begin to play out, going all the way towards the summer of this year. Nothing indicating that a bounce to retest previous highs will play out. The 10-week moving average is also expecting the same volatility to be the validating this extrapolation of consolidation. Let's see what the daily chart is going to give us to see whether we have any alignment. Okay, so this hasn't reflected what's going on right now, and yeah, well, here we can see to some extent we have an alignment, lower prices up till at least Wednesday the 4th. So I really can't conclude, completely. If anything, consolidation is also what is expressed here in terms of extrapolations on the weekly chart. I think our best bet is just to leave it with what we have here. It's indicating that today is going to be a down day, and that's what we have today. The 2nd of March is indicating that Microsoft is going to be down, and it's down right now in this pre-market session. Yes, so that's what's going on right now. Just have a look and see what you make of MSFT, and thank you very much for watching this video.